Hi everyone, it's time for our 20 Stock Weekly Challenge again. Okay, before I carry on to this week's stock suggestion, okay, let me introduce myself. I'm Joe, my wife is Sarah. Unfortunately, she's not here again today. So yes, poor me, I have to do everything myself, but it's okay. Okay, because I believe today what I'm going to suggest is quite interesting, as you will see later. Okay, we are husband and wife team, and let's go. Okay, today this company that I'm going to share about is actually from Vietnam. I don't know what you think of when you hear about Vietnam, but I think of this semi-translucent spring roll thing which looks delicious. I think about pho, yes, or I think about its food. Okay, there's also the rice fields. Okay, and this very nice scenery, Halong Bay. Okay, but okay, not talking about all those things, but today this company is giving out a stock dividend yield of 40%. So what it means is that instead of giving out cash, it actually gives out additional shares, okay, to shareholders. So for every 10 shares, you will receive 4 shares every year, I believe. Okay, so if you ask me, I think of this picture, you know, at first year 1 maybe you have 10 shares, year 2 you have 14. Okay, because every year, every 10 shares you own, you receive 4. Year 3, you have 19. Okay, I try to round down. I try to multiply by 40% and I round down. And year 4, you actually have 26 shares. Alright, so it reminds me of this graph here where, you know, at the start, it looks very boring, very flat. But really, in the later years, it is going to grow. Because instead of having 10 shares to grow, maybe you have 20 shares and you will just receive 8 shares at once. Okay, and it compounds actually. And I really think about this person here, which we are also familiar with, okay, Warren Buffett, because he really believes in compounding. And I believe this company's dividend structure really helps you to compound your ownership and your investment. All right, this company is none other than HPG. In Vietnam, I think it's Ho Fat. I really don't know how to pronounce. Okay, the stock exchange is on HOSE. Alright, I would like to really give a shout out to Queen Le. Okay, I don't know whether I pronounce your name correctly. Please, I apologize if I didn't do it. Okay, it was first suggested by her, and she has really given me so much guidance and advice while I was preparing this. So, you know, a big thumbs up to you. Thank you so much. Alright. Okay, what is this? HPG is actually one of the largest, if not the largest construction steel maker in Vietnam. Okay, what is construction steel? It is really the type of steel, the type of material and structure that you need for buildings, for railroads, and a lot of heavy construction. Okay, so it is a vital component in any country's infrastructure. Alright, so as you can see on the right hand side, 89% of the net income in 2018, which is last year, comes from steel. They also branch out into other sectors like in other industrial production, real estate, agriculture. Okay, these are quite new projects, so they are quite small as of now. And their net income, as you can see, it has been steadily increasing over the years. Okay, so let me see for industry. Okay, we can see on the right hand side graph, Vietnam actually has the largest demand as of 2016. Okay, I am unable to find more updated info, but why is that so? I really believe that because Vietnam is now growing at a very high rate, so they need a lot of raw materials like steel to build their buildings, to build their railways, and a lot of other things that they need in that country. So as you can see from the pie charts on the left, the steel demand is actually one of the highest in every in the whole of the country. Okay, it dominates all the other sectors like shipbuilding, your automotive. All right, comparing it to Indonesia and Thailand, where I think they have built more structures already, so they do not need so much steel. So Vietnam, it is still in a very strong. Is it in a stage whereby the demand for steel is still very high. All right. So I would say this is a piece of good news for HPG, because they are right smack. They are poised to really meet this demand. All right, so in terms of market share, it has the largest market share for construction steel in Vietnam. All right, in last year. All right, and I believe that it will continue to improve. Why do I say so? Okay, before I carry on, I would just like to just say that this is really for educational purposes. This is not a stock recommendation. If you decide to invest, please do your own diligence. All right, I'll just take a quick look at the financials for HPG. Okay, revenue increasing, net income increasing. All right, okay, net income, it is increasing, but there are some drops somewhere. Okay, maybe 2012. All right, earnings per share, it has been increasing. It has been quite constant. All right, but for earnings per share, I think in 2014, 2012 to 2014, it did not do so well. Okay, dividends, they stopped giving cash dividends in 2017. So you will see a dash for 2017, 2018, and of course 2019, because they are giving out stock dividends. Okay, in terms of number of shares, of course it has gone up. Okay, some of you may be worried, oh, if they keep giving out shares, will it affect the EPS? There are two things. I don't believe so. Number one, if you look at the earnings per share, in recent years, when they have been giving out dividends in terms of stock, their EPS is still actually quite healthy. All right, they are still able to maintain. So that's one reason I don't think it will be much affected, and I'm going to share another reason later in this set of slides. Okay, the book value per share, it has also been increasing. What this means is that the company has been acquiring more assets compared to liabilities, so that's a good sign. But free cash flow, we see that in 2017, 2018, and TTM is in the negative. So I will explain why later. All right. So looking at the net margin, it is from 5-6% to all the way to 15, 12, or even sometimes 17, 19%. So I would say it varies. All right. Return on equity, 20, 30%, quite healthy. Interest coverage, okay, quite healthy. Do note that the debt to equity ratio for this company as of now, the third quarter of 2019, is quite it's a little bit high, okay, 1.12. Third quarter, because the fourth quarter financial report, or the 2019 financial report, is not out yet. So the most updated one I could refer to was the third quarter. All right. So why did the earnings fall? Actually, there are two reasons. Okay. Number one, they have invested heavily in new production plants because they foresee that the demand for steel is going to be a lot higher, and their production capacity has been maxed out. So they have, for the past few years, they have actually paid a lot of money, spent a lot of money to actually build new plants. We know that steel milling plants, iron ore manufacturing plants, they are not cheap because of the materials, the machinery used, and that's why they use a lot of their earnings to actually invest in new production plants. Okay, the second reason is because for 2019, if you look at this graph on the right, okay, you will see that the price of iron ore actually has increased a lot. Okay, from a bottom here at the end of 2018, start of 2019, all the way it has spiked all the way to over here as of I think August, September 2019. So this has really taken a toll on the earnings. All right. So, but if you ask me whether it's something to be concerned, I think iron ore, which is the base material that they need to produce steel, it is a commodity and it is cyclical. So the prices, like oil and gas, in my opinion, it will go up, it will come down. So there will also be times where the price of iron ore will fall, and this will increase their earnings also. Okay, so that explains why the free cash flow also went down, because they really spent a lot of money, okay, to build their new production plants. Okay, how much did they spend? They actually spent nearly 43 trillion, okay, VND, that's a Vietnamese currency, or 393 million USD. All right, so they don't pay all the at one shot upfront, so they in stages they pay up, and it also depends on the progress of this project. All right, so up to now they have spent around 390 something million USD into it. And okay, my question is, if they have spent so much money, okay, what are the returns on this investment? Because as investors, we know whatever we invest in, we want an ROI. If not, that is not investment, that is charity. All right, okay, there's a place for that, but not here. Okay, so based on their own reports, okay, this investment has given them an increased revenue of 10% year on year. Okay, so after tax, their earnings was 3.84 trillion Vietnamese dollars, okay, which accounts for 58% of their 2018 target. This was in June. So I would say this project has been going well. In fact, in June, I would expect them to meet 50% of their target, but they have actually achieved 58. So I think it is a good sign. It means that they are on track to really earn more for the second half of the year. And let's wait for the 2019 annual report to come out, and then we'll see again. All right. So as I mentioned just now, the price of iron ore has actually gone up a lot, and it has affected them. Okay, and it's a cyclical thing, so I don't think it will affect them permanently. All right. How about the competitors? Let's see. The next competitor is actually this Hosen Group, HSG. Okay. If you ask me, looking at taking a quick look at the financials, I would say Hosen is not too bad, but we also see a drop in the current years. Okay, I am not sure why. I didn't do a check. So free cash flow, if you see, I think it has more negatives than HPG, which is the company that we are talking about. So if you ask me, I would say HPG has a advantage over this competitor HSG. Seriously, I don't know whether they are brothers or not, but okay. Net margin is something that we are very concerned with. Okay, if we look at the net margin for HSG, it is hovering around 1 to 4%. So that is actually pretty low. And what does it tell me? It tells me that this steel manufacturing industry is actually very, very difficult to flourish. Okay, I'll go back to HPG's net margin again. As you can see, the least it went was around 6%, and it is comfortably at 12 to 15% now. So definitely HPG is doing a lot better than this HSG. The next competitor is this POM, or Pomina Steel Corporation. Again, you see the net margin is very, very low. All right, so I have quite a high confidence level to say that HPG, among these three companies, our company that we are discussing, HPG, it has the most competitive advantage over these two rivals, right? And okay, some of you may be very concerned about companies with low margin. My take on this is that it varies from industry to industry. We cannot compare this industry to a tech company like Facebook or Apple, where like for example, Facebook, they don't really need to buy raw material. Most of their money goes into salaries. All right, and what makes Facebook go? It is just lines and lines of programming code. Okay, this is really if you have the brains for it, if you are able to generate the code, it is free. It doesn't cost anything. It only costs maybe the aircon and the worker's salary. That's it. All right. So compared to the industry like steel or even food industry, where you have to pay a lot for the raw materials, the net margin is always going to be lower. And even though it is low, I do not exclude these industries totally from my investment for my portfolio. Why? Because of diversification, one, and it also gives me exposure to other industries also. And even when I am looking at industries where the net margin is supposed to be low, I want to pick the champion out, the champion company. I want to try to pick the champion company out of this industry, and I usually look for the one with the net margin. So to me, if a low net margin, it is not the best, but it is still okay. All right, provided that company has a higher competitive advantage over its rivals. Okay, so let's go on. Like I said before, they are giving out stock dividends, so 40% yield 4 additionally issued shares for every 10 ordinary shares a shareholder own. Okay, so if we look at 2018 and 2017, between 2001 and 2017, they have actually increased the number of shares that they issued. So for shareholders, I think that's a good sign. Okay, and okay, this table actually shows the dividend contribution or dividend yield in terms of cash and shares that they issue. All right, from 2007 to all the way to 2017. So you can see it hovers from 20 to 50, 60, and average I would say is 30-40%. So even if it's at the 30%, it means that for every 10 shares you own 3. I think that's not so bad also, because the shares can appreciate, and if you get free shares and you sell them, even though it is slightly the price, even if the price has gone down, you are still making money. All right, and those of you who are concerned whether this large number of shares in the market will affect the EPS, I think you have a very valid point, and really that's a very good question. So the company is also aware of this situation, and what they do is that they withdraw the bonus shares that they have issued to the employees. Okay, so what it means is that retail shareholders like us, we actually own more possession of the company. Okay, so this helps to buffer the decrease of the EPS due to a high amount of shares in the market. Okay, so I think this is quite a good move by the company to protect the shareholders' interests. All right, so what are some challenges for this HPG? Of course, it is in a very competitive industry, and it is not everything good. It doesn't mean that this company has no challenges or it is perfect. There's no such thing. Okay, I would say the main challenge in the steel industry right now is that China is actually producing the most amount of steel in the world, and because they have so much steel, they are able to sell it at a super cheap rate, and that is also one of the main reasons why Donald Trump decided to raise tax tariffs on China products, especially steel. Okay, so because Donald Trump tries to take back the competitive edge. All right, so but I think looking at this number here, this is from 2017 or 2018. Okay, you see that the next largest exporter is Japan at 29.8 MT. Okay, China is almost double it, so there's no fighting, I would say. Okay, I think in the next few years to come, China will still dominate the worldwide steel market. Okay, where does this leave HPG and Vietnam? When you see the table on the right, okay, Vietnam actually is one of the biggest importer of steel. That means, like what I said just now, they need steel. They are quite desperate for steel because their country is growing. All right, so they need a lot of this building material. So they are the 5th largest importer of steel in the world as of 1 or 2 years ago. So what does this leave HPG? My question is it possible for HPG to supply steel directly to its own country? So I think there's a very huge possibility because it is a local company, and okay, I would say this gives HPG a slight advantage because they are right smack in the middle of the market, which need their products. Okay, which need a lot of their products, and do remember that they are scaling up their production because they invested so heavily in new production plants. All right, so they are really preparing for this, and I believe that in the years to come, they will be able to increase their earnings. Okay, so looking at valuation, right now, as of now, it is almost 23,000 Vietnamese dollars. Okay, this equates to $1.34 Sing dollars and 99 cents USD. Okay, so I would say it is not too high a price to pay, and even looking at the charts, it is really at near the bottom of the trend. Okay, in fact, the share price has gone down quite a lot. If you do wish to enter, do remember the portfolio size and additional valuation information. Okay, price to earnings of HPG is at 8.93 now. Okay, it is not the lowest, it's slightly higher than the 5-year average of 8.18. For those who are unsure, maybe you can wait a little while. Okay, price to book is a little bit high, 1.43, but do note that the 5-year average price to book ratio is 1.93. So 1.43 in terms of historically, it is actually not too bad. All right. So let us know what you think of this company, which gives a 40% stock dividend yield. Okay, even if you do nothing, your number of shares will just keep growing and growing and growing. And if you do decide to sell them, you will also make money. Okay, so that's it for this week. Stay tuned for week 8 where I will suggest another company. All right, so that's it for this week. See you. Bye bye.